A lot of senior housing providers are looking for financing, and the big question mark for several years has been commercial bank financing. And I'm sitting here with someone from one of the largest commercial banks, Wells Fargo, Cathy Voreyer, Managing Director of Wells Fargo. Tell me a little bit about Wells and what you're doing in the seniors housing business.
Sure, thanks Steve. Wells Fargo really has consistently been in the marketplace for senior housing. Even during the financial crisis, we were still there providing the Fannie, Freddie, FHA, as well as construction lending and balance sheet lending. So what we've really done relative to senior housing is develop specialists and focused in on senior housing, but very particular on the owner-operators that we want to do business with. And so we're going to be committed to this industry as we have been, but we're going to pick our spots accordingly.
Right. And how many people would you say in all of Wells Fargo are dedicated to seniors housing and senior care?
Oh boy, each division has their own specialists, but if I was to guess, I'd say 50 plus people.
Wow.
From originators to closers to underwriters, and that's not including asset management. So we manage obviously all our balance sheet and Fannie Freddie. So within each division within Wells Fargo that has that sort of financing that could provide senior housing operator financing, we'll have specialists within that division.
And what kind of property types are you really out there looking for right now?
Yeah, I'd say what we're really focused in on is the IL, AL, ALZ, or a combination thereof. Standalone SNF, really the execution for us is FHA. SNF we really are not putting on our balance sheet. All the other product types or community types, balance sheet or agency execution. And then we've done a few buy-in CCRCs, and we're not really doing that anymore.
On the refinance side or construction side?
Both.
Both.
Both. And part of it was legacy Wachovia days that those came over. But I'd say rental CCRCs we'll take a look at. Buy-in CCRCs, not our cup of tea right now.
Right, okay. And the kind of loans you're seeing today, is it more on the refinancing side or acquisition side? And do you have a preference for one or the other?
Yeah. I'd say where rates are right now, we are seeing a lot of refi activity, but we do acquisition also. So we don't have a preference for either. I think on the acquisition front, the market's pretty competitive, and so if our client needs to close quickly, we can get the team together and provide that sort of quick close. But we'll
60, 90 day type of thing, or?
It could be shorter than that. Yeah. I'm not saying every deal we could do that, but for the clients that need that, we'll figure out a way to get it done.
And you mentioned a minute ago construction financing. And that's been a big vacuum. There's only a few banks who are doing that. Are you okay with construction?
Yeah, we've been doing construction. I'd say that the first thing is our construction is recourse. So I know there's some competitors out there doing non-recourse. We're a recourse lender, but we've been very active in senior housing. Let me just, so for instance, our construction program would typically fill out like this. We'd be looking at 65% loan to value, probably about 75–80% loan to cost. We're LIBOR based, so it's LIBOR plus, and it's really a risk-based pricing. So depending on the acuity type and the execution, we'd be looking at 275 to 3.25, maybe 350 over that. But the key really there is risk-based pricing. And then for us, the way that we really look at the property is we look at what's called a debt yield. And so depending on the acuity, for an IL property, we'd be at probably a 13% debt yield. And the higher up the acuity would go up to 14 or 15%. And then for us, the key is when we do construction financing, we're really looking at what's our exit strategy. And the way that we've done most of our construction is we make sure that the construction is financeable in the permanent market. And so the two groups that provide the balance sheet lending and the agency lending, we work together to make sure that exit strategy's there in the permanent market.
Right. And that's a good segue into it with your group of total of 50 people in seniors housing. What's kind of, is your focus more on the agency side, the Fannie, Freddie, and HUD, or are you more on the balance sheet side, or is it 50-50?
I don't know if it's 50-50, but both sides, very active in. Wells Fargo, is a very active lender in commercial real estate in general. And to get money out for the right real estate is really what we're focused in on. So we don't have any mandates on, we need to do this much in agency or this much in balance sheet. We're going to really assess who's the customer, how can we add value, what's the risk, and can we get a deal done that makes sense for both of us.
Right. Can you give me an example of a recent senior housing deal that you've done that was a particularly good one or interesting one?
Yeah, the one that we had done, I'll start with the agency, was two deals that were being acquired, pretty short time frame, very good client of the banks, and so we executed that under Fannie from rate lock, or from loan app to rate lock was about 44 days. And so we met the needs of the client very quickly and really had the partnership with Fannie to get that done, and really was to execute on a pretty low interest rate environment.
And how big of a financing was that?
So the two deals combined were just shy of $30 million.
Yeah.
Yeah.
And how about on the balance sheet side?
On the balance sheet side, a construction loan that we've just recently closed up in the Pacific Northwest. Same sort of thing, a long-term client of the banks. We've done probably 6 deals with them, so this would be the 6th one. And it's that model that we've built where we'll do the construction lending, let it lease up, stabilize, and then we'll take it out the permanent. So you've got some of those coming off our balance sheet. We feel comfortable adding more on, and so that was a construction loan. It was 65% loan to cost. I think that was the IL/AL, and that was priced at LIBOR +3.
Okay. And it sounds like you're working nationally.
Working nationally.
Pretty much nationally.
Yeah.
So, a lot of the banks are not doing that. How do you differentiate yourself from some of the other national players?
Yeah. What I'd say is, one, we're national. 2, I don't think most of the owner-operators would hit our exposure limit. I keep hearing that from different clients that I'm calling on, maybe for the first time, that they'll, after the 3rd deal, they'll kind of hit the ceiling with the bank, and then they have to go out and find financing. I think it'd be pretty difficult for someone to hit the exposure limit that we're looking at. So that's one. Secondly, we've consistently been in the market, so even the last 3 years when the market's been pretty rocky, we were in there consistently. We're going to continue to be in the commercial real estate, senior housing industry. And then the other thing is really solutions oriented. When we look at Wells Fargo, yes, we have the balance sheet, but the balance sheet could be for bridge financing, could be construction financing, it might be a line of credit, maybe somebody needs a letter of credit. Obviously we have a depository, treasury management services. We've got the licenses for the 3 agencies. We have equipment financing, insurance services. So it's really this solution oriented, is looking for a client that needs many of those products and us providing that solution to them to really add value.
Right. Good. Well, that's you got a lot of options for your.
A lot of tools in the toolbox.
A lot of tools in the toolbox, and hopefully a lot of capital to put out in 2012.
Yeah. No, 2011's been a very, very good year for us in senior housing, and the portfolio is healthy, which obviously helps. So I think 2012, we're just going to stick to our game plan.
Okay.
Yeah.
Well, good luck in 2012.
Well, thank you. I appreciate
All right.
that.
Thanks for sitting down with me.
You bet.